In this video, we explore how 20,000 cryptocurrencies have been introduced thanks to the belief that decentralized finance, or DeFi, would liberate the financial system from the control of banks and governments. But with 2022 turning out to be more of a crypto nightmare, including the famous stablecoins that were promising alternatives to central bank-issued currencies, some are starting to wonder if DeFi genuinely has any future. Let's find out. First up, let's talk about good old cash. There are some conflicting predictions that the cryptocurrency market, which has already lost more than half of its value in the first 6 months of 2022, may continue to decline or be headed for a recovery. The odds of which are 50-50, we reckon. This goes to show the indisputable fact that cryptocurrency is great for gaming, but terrible as a form of payment. Not to mention that it also lacks a variety of beneficial qualities. It is useful to consider how finance first came to be centralized in order to assess DeFi's chances. Cash is a trait of more sophisticated human networks. There was no need for it back when we were just bands of hunters and gatherers. The barter system evolved into the norm as established societies became more sophisticated and people became more specialized in tasks that matched their skills and interests. Barter, however, requires two desires to coincide. Someone who had excess food but wanted help building a house would need to locate a hungry builder. Where's the exploitation in that, huh? So then they wanted to bargain over how many hours of labor would be a suitable replacement for a dinner. That, friends, is how cash was created. You could use shells or another useful storable commodity as money. We're not sure how people would react to that. The invention of hard cash might have been a list of debts safely stored somewhere, and then came tokens produced by humans, which eventually led to rare metals as currency. Now we're in the age of digital tokens. What a journey! Cash allowed people to keep their labor-related gains and lend them to others. Like that friend we all have who forgets to pay you back, bringing together lenders and debtors and convincing them that the borrowers will pay back was problematic, which became the basis for the growth of banks. But can we talk about the issues? The Italian Monte dei Paschi di Siena, founded in 1472, is the oldest financial organization still in operation today, and it seems like very little has changed since then. Private banks using their own currencies isn't a secure system either. When depositors lost faith in a financial institution and tried to withdraw their money, panic set in. Runs on financial institutions are frequently contagious, and people found it difficult to distinguish if a bank was suffering from a general issue or a specific problem. So it wasn't until people started losing faith in the institution itself. The majority of nations dealt with these challenges in the 20th century by regulating private banks to ensure depositors of their solvency and setting up a government-owned central bank to deal with currency. In accordance with these regulations, banks had to insure their deposits and keep a certain percentage of their assets available for withdrawal. So why DeFi? As we all know, not everyone is a fan of centralization offered by financial institutions. Libertarians are wary of the system's reliance on monopolies that the government has granted and regulated banks. They despise banks almost as much as they despise governments and believe that centralized finance is both ineffective and oppressive. Our ideal financial system would enable transactions directly without the need for banking middlemen. The argument is that by eliminating these, transaction costs would presumably drop and the power of the state over citizens would be restrained. Not a weak argument, that one. More than 20,000 cryptocurrencies have been created thanks to the web and blockchain technology, with Bitcoin being the first and largest. DeFi, however, still needs to demonstrate that it's a viable alternative to the centralized banking system, as seen by the enormous losses experienced by Bitcoin markets in recent months. It is still not obvious how the four banking services stated above could be provided without reliable financial intermediaries. E-finance still has few applications in the actual economy. It has largely made hypothesis easier. However, what draws speculators, wild price swings, makes for a bad currency. The knowledge of two former top 10 cryptocurrencies, Terra USD and Luna, provides a valuable lesson. $1 was sent as the value of Terra USD, which was intended to be a stable coin. That held true up to a point. By the end of May, it was being bought and sold for less than 3 US cents. In the same time frame, Luna's value decreased from $82 to $0.02 to US cents. Currently, DeFi seems more fiction than reality, and even with inflation eroding their purchasing power, central bank currencies still don't really have any competitors for the daily business of buying and selling things. The truth remains that they're also still far safer stores of value than cryptocurrencies. Alas, there goes cryptomania. We don't want to get too ahead of ourselves when we say this, and some of you would totally disagree. The hype around crypto is over. What came as the alternative to banking ended up becoming the digital Titanic. Some people have suffered insane financial losses, and the absence of regulations creates opportunities for serious crimes. The popular belief is that because it's uncontrolled, it resembles the Wild West and offers chances for those who want to participate in illegal activities. So before we're told, "Okay, boomer," we'd like to say, hey, we did our research. Now, in other news regarding cryptocurrency, you can bet on CloudBet. Major gambling sites like CloudBet now provide a variety of cryptocurrencies, which previously used to be well hidden and only known to the most dedicated cryptocurrency gamblers. All new depositors at CloudBet have the opportunity to receive up to 5 Bitcoin in bonus funds. This is a generous amount that isn't available at any major casinos. Additionally, the website offers deposit bonuses on all deposits made on Thursdays. The good part is that they frequently offer zero margin odds, assuring that winners receive the greatest payouts when wagering there. If you're one looking for an edge, there's a CloudBet loyalty club, which gives players prizes for their consistent use of the website. The fees associated with cryptocurrency deposits and withdrawals are minimal for gamblers. Users will pay a small fee to use the cryptocurrency, although this will typically be negligible in comparison to the costs associated with the majority of traditional payment methods. Next, what made Owen eat his own tweets? Football legend Michael Owen was forced to delete tweets he had made about an NFT and an unregulated crypto casino. After retiring in 2013, the former striker for Liverpool, Manchester United, Newcastle United, Real Madrid, Stoke City, and the England national team is now a prominent sports commentator and supports cryptocurrencies and blockchain technology. The in-question cryptocurrency casino, Punt Casino, has hit back, claiming that they are a legally recognized casino in Curaçao. According to UK law, only casinos, sportsbooks, and other betting sites that are regulated by the UK Gambling Commission are permitted to lawfully advertise to UK customers. With gambling a common pastime among football players, Michael Owen has previously sponsored other UK-regulated betting sites like Bet365, Ladbrokes, and William Hill. However, there is still no license for Punt Casino. Reports suggest that sports fans are also more inclined to own crypto assets and NFTs, according to a recent US survey. But something tells us Owen and his fans are gonna think twice before pointing his fingers on the internet. And finally, let's discover how bad the crypto market is right now after the crash. No company has suffered more damage from the tens of billions of dollars lost in the Bitcoin crisis than Coinbase. The biggest and first publicly traded cryptocurrency exchange in the country, Coinbase, has just revealed plans to lay off 1/5 of its workforce as its stock price has fallen by 81% this year. Analysts, however, predict more bounce to the crypto bubble than the present drop shows. So all is not lost for the exchange. Despite its current difficulties, they believe Coinbase will survive and eventually prosper in this bear market for cryptocurrencies. A request for comment regarding how the cryptocurrency market has affected business was not answered by Coinbase. Coinbase's CEO, Brian Armstrong, stated that the company tends to perform its greatest work in a week period during an earnings call in May. Now, where was this confidence when we needed it in our lives? This spring, as growing inflation tightened its hold on the American economy, the price of Bitcoin, Ethereum, and other significant tokens began to decline. Investors started taking their money out of riskier investments like cryptocurrency as the price of necessities like gas and groceries rose. The price of cryptocurrency continued to decline as investors sold off their digital assets. Bitcoin's price, which peaked in November of last year at about $68,000, has decreased by 56% since the year's start and is currently trading at about $20,250 as of Wednesday. Ethereum is down nearly 70% to $1,140, while Ripple is down 61% to about 30 cents. It's looking bleak, folks. That's a wrap for this video. How do you feel about the current crypto climate? Were we promised too much, or are we judging too too soon? Let us know in the comments below. As always, don't forget to like this video and subscribe to our channel for more videos like this. See you in the next one.